All right, so this panel we're going to specifically talk about peer-to-peer lending. First, some introductions. Again, my name is Matthew Majinskas. Thank you, Jonas. Represent a private investor group based out of New York. Focus on the Baltics and Poland, SME and property primarily. In case you're curious, my family name, it's actually Latvian, a hint of Polish, not Lithuanian. But we certainly are interested in this segment, in this space, and we certainly are interested in Savy. So someone we haven't heard from so much today, Vytas, can you introduce yourself?
Yeah, I'm Vytas. I'm CEO of Savy and one of the co-founders.
In case anyone walked in, Martin, just a couple words about yourself again.
I'm an international banker who has worked for many years outside of the Netherlands, including the UK, Japan, and Russia. And since 2012, I'm focusing on this new fintech area.
A few words, just in case someone walked in.
Okay. Again, my name is Jens. I'm from Norway. At least I'm from there. I'm not very much there, but still. 42 years old. I'm married. Have 3 kids. My background is financials. I used to work as a stockbroker before. Started up the business here in 2009 after seeing the issues that we had in 2008 with the financial crisis, which was kind of the reason for coming up with the solution of Trust Buddy.
Great. So again, in this panel, we're going to focus specifically on peer-to-peer lending, debt, crowdfunding. Want to try to get, we only have 30 minutes, want to definitely try to get into as many specifics as we can, the opportunities for borrowers, the opportunities for investors. But before we get to that, I want to try to just take 1 minute to paint a roadmap for you, for those in the audience that aren't as familiar as we are or haven't been following the headlines as much as we have on the state of the peer-to-peer lending market today. So in the past 5 years, this sector in the Western world has grown 100 times. Not 100%, but a factor of 100. What does that mean today? If you look in the US, you have companies like Lending Club, Prosper. Let's focus on consumer credit to paint an easy picture. You have companies like Lending Club and Prosper in the US. Roughly, last year, they did 10 billion euros in originations. What does that number mean? It's less than 0.5% of the total addressable consumer credit market in the US. In the UK, it's 1/10 of that. Companies like Zopa, RateSetter, they've done 1 billion last year, roughly, in consumer credit originations. What does that number mean? It's less than 0.5% of the total addressable consumer credit market. Continental Europe, so we have 10 billion in the US, 1 billion in the UK. Continental Europe, a couple hundred million, mostly from Jens. So it's very small. The first takeaway, it's still less than 0.5% of the total consumer credit market in the EU. That's about 850 billion or so. But the number is even smaller. It's less than 0.1%. So EU has a while to catch up to the UK and the US. That's the first takeaway. And the second general takeaway, just from painting that picture, is one of two things. You can look at this and say, A, that's a pretty small, insignificant number of the general market, or B, there's a long way to go before we reach any sort of meaningful saturation or integration with the more traditional forms of lending. One more point, again, that was the Western world, and that was just consumer credit. I didn't talk about secured loans. I didn't talk about SME financing. I didn't talk about real estate financing. I didn't talk about emerging markets. South America, Asia, India. China alone has thousands of platforms in P2P lending. So it truly is a global phenomenon, the growth, and it's growing at a very, very rapid pace. And the last point I'll leave you with before we get started, so we don't have to talk about the growth again, Foundation Capital, a company out of the US, a VC firm, they released an often quoted report in this industry that by 2025, the P2P lending industry will do $1 trillion in originations. What does that number represent? That's 10% of the small cap credit market. So industry started 10 years ago. Today, less than 0.5%. The projection, 1 trillion and 10% in 10 years. So having laid that all out, we have the growth. We don't need to go back to it. Let's not live on the hype and the numbers. Let's talk about some specifics. So the first thing I want to do is talk about the borrower in this business. Jens, with TrustBuddy in Sweden and the markets that you operate in, can you give me 1 or 2 very specific reasons I'm a borrower in Sweden? Why should I take a loan on TrustBuddy?
First of all, every time when you borrow money with TrustBuddy, it's free for the first 2 weeks. So that means the lender doesn't make any money, TrustBuddy doesn't make any money, and it's totally cost-free for the borrower to pay us back within the first 2 weeks. That's the first thing. Of course, if they keep the loan for a longer period, it costs them money. But then we take an establishment fee and the interest. And that's how it works. Either we are there or others are there. The market in Sweden in itself is approximately, for the consumer loan market, is approximately 160 billion SEK. And for the SME, is approximately 500 billion. And again, SEK. But there has been a lot of things that I would like to comment during the discussions today, and it comes down to why do you think that we're going to compete the bank? Not necessarily going to do that, but we have a system, we have the ability, we are entrepreneurs that are willing to change and do systems differently. That makes it easier for people to access these platforms. Either they are lenders wanting a better return, or they are a borrower. For some reason they need some money. We of course know what they're using the money for, but not necessarily always the reason, but we can guess. But when they have a need, they either go to the bank or they go to alternative solutions like ourselves or other platforms.
Okay, great. Vitas, continuing with the consumer credit line, we haven't heard from you today, but same kind of stats to start it off. Lithuania, consumer credit market, as I understand, it's about 600 million.
Yeah.
Savy, you're right around that par of the EU average, about 5 basis points of the market.
We were there small in
so,
comparison.
yeah, it's just started in August, first one in Lithuania. If I'm a Lithuanian and I want to borrow, why do I come to Savy? 1 or 2 reasons.
Well, basically, to comment very short, is that we are the best value for money deal at the moment in the market. Why is that? Because we have the cheapest loan in comparison to the speed that we can issue. So we have very good liquidity in our platform. So the investors can sometimes fund the loan in 2-3 minutes. If the loan is bigger, so it can take up to 12 hours. But the money itself, the loan can be issued within like 12 hours of application. So you get like a banking interest rate from 12%, and you get the speed of a payday lender or their speed credit provider. So we are actually the best value for the money deal in the market.
Great. Martin, you're in a different industry than we've just described, SME, emerging market SME, but we know you have, both with Lendahan and Simbit, a variety of equity, debt experience. But generally, for SMEs, or even SMEs in emerging markets, 1 to 2 reasons. Why should they go to companies like yours, platforms like yours, instead of the traditional methods?
And you're talking from a borrower's
perspective here.
Well, from a borrower's perspective, and I think it's been mentioned before, it is often a lot quicker than traditional channels. It's often also cheaper in comparison to existing financing channels. The interesting thing for the company raising the money is that the investors are also acting as their brand ambassadors. So that's where you see the overlap with reward-based crowdfunder. And I think that the SME lending online also suits better and better the requirements of a modern entrepreneur who is used to do everything online nowadays. And that is in the DNA of an online platform.
Great. Thank you. Jens, bringing back to consumer credit, typical borrower in Sweden are the markets you operate. What's their age, income? Are they financing cars, consolidating debt? taking holidays?
Well, for the short-term product, which is the only operating product per date, we are launching the SME platform in 8th of April. But when it comes to the short term, it is primarily, as I said, instead 52% is women, 48% is men, and the age is in two groups. It's from 25 to 30 and 30 to 35, which is the main group. We have from 22 to 70 years in total. And they're primarily borrowing money for two main reasons: paying bills and for holiday. So they fluctuate depending on which time of the year. And there is, of course, a lot of other things, but that's the main two groups.
Okay, great. Vytis, same question, Lithuania.
Yeah, we are only 1 hour flight, but in comparison, they're different. In Savy, the average borrower is also a female, 30, 40 years old, but the main purpose is debt consolidation or refinancing and home improvement. So basically, Lithuanians are borrowing not to have fun. Yeah. As well, the interest rate, the average interest rate is 25%, and the loan is 1,000 euros for 2 years. So basically, these are the main criteria of the borrower currently in the platform.
One follow-up to that. I understand Lithuania has one of, if not the lowest debt to household income ratios in the EU, something like 38, 40%. EU average is close to 100%. Does that affect the way you look at the market at all, or you're not concerned about it?
Well, basically, Lithuanians, from the beginning, they don't trust the institutions. It doesn't matter whether it's a bank, it's a payday lender, or it's a platform like we at the moment. Traditionally, Lithuanians would like to borrow from friends, family, maybe neighbors, so not to get into credit with the institutions and then maybe have a default whatsoever. Second reason probably is that most of the real estate in Lithuania is bought by not credit, but it is after Soviet Union inherited or received during the occupation. So we have a lot of real estate which doesn't have a mortgage on that real estate. And probably the most important thing is that the National Bank imposed the debt-to-income ratio 40%, and we see that the income to loan ratio of 40% is the average, as you can see in Lithuania. What we see in the future, we see quite a flat market. From our perspective, we see that the growth is very slow, and probably it will continue to grow slowly. So we see our main market share in refinancing, actually, and yeah, this is the main focus, I think.
All right, Martin, you talked about it a little bit, but typical needs of one of your SME borrowers. How big are their revenues? How big are their loan sizes? Their credit needs?
Well, as I said, mesofinance is a very narrowly defined area. It goes from $1,000 up to $50,000. The average outstanding of loans through Lenderhand is $7,000. And normally it's for working capital or expansion finance. And what is very important is that it should meet the social impact criteria which Lenderhand has imposed on its borrowers. And for instance, it needs to create demonstrably new jobs. It has to create a cleaner environment, etc., because that is going to be one of the requirements to which people have to meet before being allocated a loan.
Okay, great. Jens, you mentioned SMEs you're going to roll out. Are there any sort of other products that you see that TrustBuddy can provide in Sweden, the markets you operate in? Are there revolving credit type instruments, something in real estate, or can you comment on that?
Yeah, I think the SME will be rolled out in all our markets, of course. That's the purpose of this acquisition. I think the crowdfunding is in a very early stage, so I think that's extremely interesting. But of course, as an entrepreneur, I see a lot of other products popping up, like secured loans is extremely interesting. Talking about competing with the old financial institution like banks, etc. I also see that in the future, of course, it's just a matter of volume and the accessible lending capital. We do have that today. We don't have the product, but we have approximately 360 million pounds in lending capital accessible. But what is interesting also in the future, right now, the interest is also kind of playing us, a little bit. But I think being able to also lend out to house loans, bigger house loans, and secure it's interesting. But what I do see, which is interesting, which is popping up, is the crypto segment. So the bit and the crypto segment is popping up and is really, really coming and hitting us from behind. And they are as old as us, but they haven't kind of being able to develop as they wanted. And they're kind of struggling a little bit in this small group amongst themselves and kind of discussing the same regulatory issues as we do. And they really look up to the peer-to-peer industry. But what I find interesting with the crypto segment is I see a clear crossing point between the crypto and the peer-to-peer in the near future, because this is a natural, this is a natural turn that we are seeing. And
specifically, do you mean actually lending in a Bitcoin or borrowing in a Bitcoin, or are you taking it deeper than that?
I think both is in an early stage. Peer-to-peer is in an early stage. We were talking about experience. We were talking about regulations. We were talking about defaults. I was talking about how to cooperate. I think it's very important now where we are, and I'm kind of a little bit on sidetrack here, but I think it's very important on where we are, that we are using the experience that we have so far. You were saying it yourself, the volume that we have lent out is really small compared to the total market. Okay, so of course, everyone that runs a peer-to-peer company has a default. Everyone who tells you they don't are lying. But and this experience we should take into consideration and work and make something good of, because that will make the business sustainable. So this is what I think where we are, and that's exactly the same what's happening with the crypto segment as well. It's coming, and it will be crossed, and they are lacking experience, and this is kind of a try and test phase. It will be that for us, it will be that for them, but you already now seen that bonds and derivatives and also in interest tools is attached to the cryptocurrency. So both in lending purpose, but also to try and kind of legalize in a better way the actual or particular coin.
Great.
So that's maybe a bit sidetracked.
No, that's very interesting. I think I agree. I definitely think it's coming. There are sort of platforms around Europe that are doing that, not exactly regulated at the moment, but I definitely think it's coming. Bringing it back to consumer credit, Lithuania, Vytas, same question. You're in consumer credit, unsecured loans right now. Do you see any potential other products that you could move into based on the market?
Yeah, so we started actually only in August, so consumer credit was a logical entrance point because it's the cheapest. It's cheapest to buy, the risk, and it's easiest to understand for investors, and the smallest capital requirements. But basically, we are now looking at a couple of more products, that is SMEs and secured loans. So we will see what we can do about that, but Jens, I think the experience is a more interesting time because we're dealing with regulation issues here in Lithuania, and we are educating the market. So we are in very early stages, and now we also think about expansion. So there's so many things that we want to do, but in the end, you have only limited amount of time in your daily operations. So we're thinking about HELOCs, like home equity loans. We're thinking about SMEs. And the first part of the conference was about crowdfunding. Maybe there is not understandable in Lithuania that platforms like Savy can also do lending to businesses. So we have also regulating issues about that, and we'll see what we can up to.
Yeah, great. I think that's a good segue. It's a young market. Jens, go ahead. You can go. I was going to go into regulation because you're not on the panel, but yeah.
I think what you're saying here is what you're saying there, that you're struggling a little bit with the regulations. We all do. We do in all markets because the regulators doesn't really know what we are doing. But we are trying to talk to the regulators, and we have a good dialogue in most markets, but in some markets they will find you kind of offensive, all right? So I think, but again, it's coming back to you as union with us, and we do the same product as you. We do SME, we do long-term, we do SME, short-term, sorry. But I think it's important that we cooperate, because that will help the regulators to understand what we're doing. And we kind of need to take the lead to learn them and teach them and say, hey, we're not here to be aggressive, we're here actually to facilitate, because that's what peer-to-peer is. We are facilitating.
It's exactly the topic I want to talk about, Jens. If sticking with you, yeah. As you're not going to be on the regulation panel, Martin is. Transparency, cooperation, anything else that you can just throw out there that's a real pain point right now that the regulators in Sweden that they don't understand, that they need to understand. Regulation.
Is this sent live to the regulators?
As I understand it is, yes, being live streamed to Swedish regs.
First of all, is my partner, which is a specialist when it comes to regulations. But of course, I've been involved in all discussions, so I know a little bit about it. Sweden has just changed, so they came up with a license which is fit for the peer-to-peer industry. There is different regulations in all markets. What we do, however, have is a structure with a PSD license. So if you have a PSD, that's a MiFID regulated license, so it's a pan-European. That together with a trust make you, in most markets, capable of being compliant. So this is what we believe will be, hopefully, a kind of a future common regulatory platform. So that's exactly what we are moving forward on. For now, we've been individually fitting in to the local markets. And of course, it takes quite a lot of effort to do that, whatever it takes.
Great. All right, thanks. Vitas?
Can I just ask you, what is the most offensive country in EU regarding regulation? It's not Sweden, right?
Tough to deal with.
Well, again, it would be wrong of me to say offensive, because there was some guy here commenting. I think it was you, Oliver, that was saying that they hear, but they kind of attack you if you're wrong. In Norway, we kind of find the regulators making it not necessarily difficult, but since we're outside EU, it's more. I think it's a difficult answer to answer, or a question to answer, because, for example, I'm going to tell you this: in Finland, for institutional capital, is not allowed to be deployed into a peer-to-peer platform. Is that wrong? No, that's their opinion. That's how they do it. So we just have to fit in. So that's what we're kind of doing.
What's the most favorable?
Favorable?
NA?
No,
All right, moving on. Let's bring it back to the business side. We have a regulation panel coming up, which will be very, very interesting. Vitas, the borrower side, what 1 to 2 specific challenges when it comes to marketing, retaining, dealing with the borrowers?
Actually, I would like to get back to education. And we are so young. We are mixed to pay the lenders. We are mixed to credit unions. We are mixed to alternative financing. And people are not educated at all, basically. So maybe up to 15% know what platforms does. So it's a long way until people will see such platforms as one of the ways to get a loan, because now they see banks and they're not accessing to them most of the time because it's too it's too far away for them. They see credit unions, but most of the time credit unions needs collateral, and they see payday lenders, and they see alternative, and we are one of the alternatives. So our goal is to become not an alternative next year, and our goal is to be one of the preference choice of the borrower. So the first issue I would say is education. Second issue is very clear tax requirements, because currently the tax requirements are very difficult for borrower in Lithuania. And I would say most of them are not aware of that fact, because they have to pay the income tax for the investor. And this is the thing that I hope that we will find some solution with the tax authorities this year, because it is not favorable at all, and it's very difficult actually for the borrower.
Okay. Martin, back to the borrower. Any specific challenges in attaining them, retaining them, marketing to them, or is it coming pretty easy?
For the borrower, huh?
For the borrower.
Well, a happy borrower will come back to you. So, and that's kind of a stickiness which you should create not only on the investor side, the lender side, but also on the borrower side. So how do you do that? Well, if you have to work with the right partners who are receptive to their needs. So I would say it's extremely important to not only look at the investor side, but also at the borrower side, which often is also a real problem for online finance initiatives, because they have to strike the balance right in their business flow between borrowers who want to borrow and lenders who want to lend. And that is almost an art to balance that right. So the online finance provider, the intermediary, say the trust buddies, the lender hands of this world, they have to plan now already what they're going to create in terms of volumes for the coming 2-3 years in order to be able to cope with the expected investor increase. And that is a real tough one. And that's an issue where all the providers are working with, coping with.
Jens, your #1 pain point in trying to serve your borrower. Anything jump out? Marketing, retaining them.
Can I rephrase the question?
Marketing, retaining them, trying to make sure they're interested in other products. What's the biggest challenge that you see on the borrower front?
To keep them with us, or to...
However you want to
Okay,
take
so
it.
our customers is approximately returning 3.2 times. So they're very sticky.
Sorry, say that again? What do you mean?
Every customer with us borrows 3.2 times.
I see.
Okay, so it comes back a lot, and that's on the average status. What we do see is, when it comes to marketing, I would rather talk about finding the right customers, but again, that's back to scoring, and that's back to creating a solid portfolio for the lenders. It's so easy to adjust the scoring in a favorable way, which will give a bad outcome. And I think it's very important to look in the cost of acquisition of a customer and what you need to do there. I mean, if you talk about communication, that's a whole different story. But then we are talking about what kind of or type of campaigns we're going to do, etc., etc. But I think involvement is always important. Communication, of course, is always important. And with the customer base that we have today, we do have quite a power to be able to communicate different products, of course. And I see that, for example, with our short-term product, when we now launching the long-term product into, let's say, Sweden, it will be easy for us to offer them to swap into another loan, which will be favorable for them if they are in a default. because it's different criteria. It's different criteria on how you pay back. So this is how I will play the products. SME is different. That is a business wanting to borrow money to establish a business. But I think when it comes to attracting customers, it's primarily the 14 days free period. But what we do, what is important for us, it doesn't matter what message it is, but it's important what kind of conversion we are doing based on the scoring.
What is your application approval rate?
It used to be around 65%. That was denied, so we're letting through 45%. But this are in the Scandinavian markets. In the Southern Europe, it's 5% approved. Okay, so it varies. But this is constantly tuning, and that's what I'm saying also, going back to saying we need to work together, because we do have quite a bit of knowledge. As said, with the big data scoring that we have today, I can today tell the outcome of 70 people out of 100 with 100% accuracy, based on big data scoring, based on the data that I'm sitting on. I'm not saying that 70 of these people will pay you back, but I'm saying that I know the exact outcome of these 70 people. And that's why the data is so important, and maybe we should share the data in the future. I don't know, but I'm constantly nagging about this because I think it's so important.
That's interesting. Vitas, what about you and approval ratings for application approvals?
Yeah, we are approving now 3.5% from 100, so that's very low approval rate. But we do it because we don't have enough data, first, because we are quite young. Second, we are very conservative, and we don't want to mess around. Of course, we would like to increase that approval rate up to at least 10%, but like Jens said, we can do that, but the outcome will be bad. So currently we are improving our credit score and working with data, just to have a really well-balanced credit score.
I think, and that's really good, but I think not necessarily letting through few people is the safeguard to getting your money back. Because when we're doing tests in periods, we do also see if we tighten the score and whatever we do, for some reason in some periods and in some tests, we actually see that the numbers sent to debt collection will increase. So it's all about what you're asking for, yes, and it's all about knowledge. So that's my point. I just want to say that it's not necessarily if you let through 2 people out of 10, it doesn't make any sense that you're going to get your money back more than if you let through 4. But it's the quality of the people you let through. But hopefully it's better with the 2.
Martin, in your markets, is there a general sort of rule of thumb for approval rating of applicants, or is it a completely different beast?
Well, there are, since we're operating in the emerging markets, in principle, the kind of questions you ask are the same. So you look at good moral character. So that's a very qualitative thing, because you can't put that in immediately. You can't derive that from data. So you need to have the personal interaction, and you should have the knowledge of the family environment where somebody is coming from for these kind of loans. So the second criteria is the business proposal should be viable. So it should be a business which is already 3 years in operation. So clearly the startup phase is being cut out, and that is the most risky phase of a company life cycle. The business must be profitable, and it should comply with local rules and regulations. And that's a theme which is already singing around here, I think, from the start of the discussion. A lot of crowdfunders who are maybe not regulated by financial regulators, they already are complying with all kind of other legal requirements. So they're not flying below the radar screen in that sense. And another requirement which Landhand has is that it's not financing a suspension of a current loan. So it's not giving a loan to replace another loan. So it's really new money which is going into the company. And then the last requirement is it should be a socially relevant investment, and that's also why it's again a bit a different type of investment than a pure financial investment.
All right, thanks. I want to move on to investors now, so just one last question from the borrower's side from each of you if you can. Can you provide a range of an APR that the borrowers receive on your platforms and then an average? So a range based on grade and an average. Borrower APR.
The APR for the borrowers.
Yep.
It's flat, 19.1% in our short-term model. 19.1 is flat, but because of its 30 days duration, it picks up to 240 a year if you're going to calculate it that way. When it comes to the SME, it's between the range of 5 to 12. You can also have it higher, but there's a roof in the Netherlands. But it will be the same in the other markets when we're launching them. And it's pretty much the same when it comes to the long term. So, as you understand, there is 3 different products.
Yep. Okay.
Are you going to ask me the same question when the lenders afterwards?
Yeah, that's going to be the first question. But we'll go through the borrower first.
Yeah, so average APR is 35% currently, and that's like an average for 2 years.
Martin, on your platforms for the borrower APR.
Let me tell you what our borrowers are facing. On the last visit to the Philippines, which was September this year, our blogger, her name is Luz, she started to interview the entrepreneurs who are finding finance through Lenderhand. And there are fantastic stories. And that's, at this moment, how we demonstrate social impact. On the way, she was talking to one of the borrowers and said, you know, don't you find it very high what you have to pay in interest? And the lady said, well, you know, otherwise we have to deal with Bombays. And Luz asked, what is a Bombay? Well, a Bombay is well, to put it very bluntly, it's an Indian loan shark which is active in the Philippines. They will charge customers 30% not per year, per month. And that is, I think, also a demonstration of the fact that whether you like or don't like payday loan lending, you better have it, you know, regulated, because at least that's when you make sure that everybody gets the right piece of the pie there.
All right, thank you. All right, let's move on quickly. We don't have much time on the investor side now. I have just a few key questions here. First one, APR to the lender. So we know what it is for the borrowers now. That's after fees. The lender, obviously, the main advantage, disruption point in this industry is the tech vastly lowers the spread. So average APR range, if you want to provide it for the lenders.
In our model, in the short-term model, is 12% return to the lenders in every loan, every time. So on average, we say that we aim for 12% a year for the customers on the short-term side. On the long-term, it is the interest which is charged, and the cost for the borrowers is there's a fee added on top of the APR. And the same with the long term. So varies from, I would say, an average on around 8 to 9% in both of these products. That's a short
Very
answer.
Good. Martin?
The lenders through Lenderhand get 4%. And on top of that, they have the social impact, because they know that the moment they give the money, something is useful is done with the money.
In Lithuania, the average return currently is 23.2, but again, we are quite young. I believe the number could be higher in the end of the year. There are investors where they receive 30, 32, but we don't market that because it's too high. We wouldn't want to do that. And as there is a risk if we would start marketing like the really highest return that is possible, we would be seen as a fake, and it's just an opposite thing that you can receive.
Sure. Okay. All right. In my opinion, this is the most important one. I want to ask you about your investor makeup. You both, Martin and Jens, touched upon this. If I were going to ask you on your platforms, the investor makeup, private retail investors versus institutional investors, could you give a broad proportion? And if they're institutional, are they family offices? Are they asset managers? Are they hedge funds? Are they banks? So private versus institutional. Jens? Yep, on the platform.
In how much we do have, or
the breakdown, private versus institutional.
Private with us is 95% per date.
Yeah, I thought that was very interesting.
Yeah, and I think it's very important because institutional capital is very interesting and is very tempting. But in a minute, the institutional capital is kind of taking the majority of your stake. You're not peer-to-peer, in my opinion. As an entrepreneur and a true believer in peer-to-peer, it would be completely wrong to me to say that I'm going to establish a peer-to-peer company and, hey, come along, put on your billion into my platform, and we'll leave the people out. That's not peer-to-peer.
As you mentioned, that's very different from the U.S., so that's a core principle that you take on your platform?
Yeah. So we do have, there is institutions in two various ways. On the owner side, where we, of course, have BlackRock and Tiger and these kind of companies. And we also have a couple of them as lenders. But as said, is individual in the markets. When it comes to the SME, it's difficult for us to have institutions, again, because it's primarily built in a way where it's suitable for private individuals. It would be wrong for an institution to sit there and take the whole loan loss of 8 or €1 million in a time. But for the short term it works partially. For the long term it works also, but I think in general you should always aim for building your product in such a way and focusing on moms and pops money or private money.
Very interesting. Martin?
Same as Jens, also 95% private individuals. We're talking at this moment to several institutions, but not financial institutions, but government institutions who want to lead part of what they were doing previously through development aid, but now through a, say, more social capitalism type of investment. And we would welcome that because one of the rule of thumbs of online is if a loan is subscribed for more than 50%, it's much easier to get the last 50%. So we want to have that as a, say, underwriting facility. And that is a very interesting development because, in fact, you're talking to one part of the government who is leading money through you. And on the other hand, there's another part of the government, the regulator, who still wants to know everything of you. So that is, I think, the phase of the market where we are in.
Currently, we have 100% private money, probably because we don't have the clear regulation. And actually, at the moment, institution capital would be quite difficult to participate on the platform. In the end of the year, when we will have new regulation, it depends on the regulation. But if it will be stated as like it is in the draft, so institutional capital won't be able to participate in the platforms. We don't think that it is reasonable. I think we should definitely let institutional capital to participate. The question is at what extent and what that would give or how the market would gain from that. So it's too early for us to speak about that, but we are not like the Germans who have like 100 million euros on their platform, institutional money. So it's very, very early, and basically it's only people, and it's good to diversify the risk currently.
That's very interesting. I think we have a couple more questions, but running out of time. Just to summarize that, it's a very different take than in the U.S. The U.S., the head of Prosper a couple years ago said, I'm going out on a limb, and if you don't have institutional capital involved, the concept won't work. So U.S. has a very different take. UK maybe in the middle. Everything I'm hearing thus far from the panel is very interesting. It's very much peer-to-peer here, very much private retail. We'll see what happens. I think that's enough for this. Does anybody have any questions?
Thank you for a very interesting discussion, and thank you, Matthews, for asking one of the several last questions about APRs. I was very interested to hear an answer to that. And related to that, I actually want to ask a question. Mr. Van den Belt's company, for example, has a social mission attached to it to provide funds where otherwise there would be no funding available at all. Whereas, for example, I just searched on TrustBuddy's website and I saw that they advertised, I'm not sure if that's equal to APR, but they calculate something that is effective interest rate, and that was 800% for the highest possible amount, up to 4,000 for the lowest amount. So it's kind of, there was a lot of talk about this being alternative to banks, but as I see it, this is more an alternative to an alternative financing. So do you see peer-to-peer platforms as serving any sort of social mission in a society, like either bringing cheaper financing to the consumers than payday loan companies, or sort of providing households an opportunity to dip into that lucrative investment market, whereas it wouldn't be otherwise available, or it's sort of in the middle, or is it just a business? Thank you.
I think we've gotten Martin's take on the social impact. So, Vitas or Jens, do you have on the consumer credit?
We think that it's very easy to say, to declare, for example, that someone is bad or someone is good. We don't do that, and we say that banks are suitable for some part of segment, payday lenders are very good in some segment. We are definitely finding our own market in Lithuania and abroad. But if we will have up to 2% of consumer credit market next year, that would be, we would consider that lucky, because that would say that we are giving 1 million euros a month of loans. That's a lot of money in Lithuania. We don't see this as a social mission at the moment. We see that we are giving inflow of capitals to people whom our credit ratings are suitable. And of course, we are giving a good return to investors. So that's the main point. We are focusing more on the borrower side at this conference. But P2P is lending someone's money, so that's very important that we are serving the investors. So that's the social mission, if we can call that.
Any other questions?
Hello. My question is to Mr. Glasso, and I was wondering why TrustBuddy opted for a solution to operate as a public company rather than a private limited company. And I wonder, does it have to do something with the values of transparency and credibility? Don't you think you would be able to offer the same level of transparency operating as a private company? Is it something where you recommend to other crowdfunding platforms that strive for the same values?
Oh, you were asking why we decided to go public, right?
Yeah, exactly.
Yeah. I think I mentioned that in my speech here earlier. The reason why we did that was when we launched our business in April 2010, the first year we lent at 2.5 million. The year after we saw we were moving, but we had struggled because the demands for getting the borrower, the capital to the borrowers, the demand from the borrowers was so huge that we needed to attract more capital. And as he's describing, he's a young company, it's difficult to get the necessary capital that you need to have the growth. Obviously, we could say no to all our customers, but that is also kind of a reputational risk, saying that, hey, we can't support you because we don't have enough money. And we did that in periods. But being listed has given us a lot of opportunities and helped us in growing our companies through being able to gather capital on the share side when we needed that. But the most important for us and the most important reason for us doing that was to try and be more transparent, to kind of build a trust towards the lenders, because TrustBuddy, who the hell is TrustBuddy? You know, it's a new company, and they were doing what? They're lending out money, and why should I put money into there? Hey, they are actually reporting numbers. I actually can look them into the books. Yes, maybe I should test them out. So that was what we tried to gain, and that's what we got. A different question is it right for us to be stock listed where we are now? That's maybe a different question, and that's up to the owners to decide. But I think it's an interesting question, but that is the answer, and that is the reason why we did it.
Any other questions? In front.
Maybe to summarize, in your opinion, this market, it's still very small. Will it ever get mainstream? Like, if you compare that to banking, like in some future, will it get mainstream?
Yeah. Well, nobody is really discussing the big elephant in the room, which is Google, Apple, and the others. And we're all waiting what Google is going to do with all its banking licenses. Supposedly they have 40 banking licenses already somewhere on a shelf. So something is brewing there. And as I said before, this generation is already fitting a lot more the requirements of consumers. I think if Facebook or Google is seriously going to get into this area, we will see a real disruption.
Well, will it ever become mainstream? I think in different markets, yes, it will. But it will find its own customer. It's a specific product for specific people, and it's very suitable for different type of markets. So bank will be banks, credit unions will be credit unions, payday lenders will be payday lenders. P2P platforms will be P2P platforms. So basically,
I think it's quite obvious. Mainstream, that is an odd question, kind of, because do we want to grow? Will the business grow? Yes, it will. And why will it grow? Because the demand is there, and the demand for money will be there. Either it's a bank or not. There will always be people moving in front of us and thinking that, oh, hey, I have this solution to this problem. So yes, peer-to-peer, but what I think is important is that we keep it as peer-to-peer, because if we're going to get like a sub-broker of a bank or something, it's not peer-to-peer. But I think, yes, we will go mainstream, and you see the development, how it has moved for the last 10 years. It's grown massively globally. So it's a global phenomenon. And I think it's the right thing that it's get more difficult to run this business, but yes, it will for sure be a mainstream, and I think it will grow massively also in the future. So, and just a short comment, if you look into the SME business that we do in Netherlands, if you see the growth there as well, they are just at the breaking point where they're starting to get popular, where they're starting to get known, the return is out there, everything is in place, and this is similar to all companies. All startups will have this, and you will see a boost. So yes, it will be. It will continue to grow massively.
Great note to end on. Thanks to the panel. Jovenis, do you have anything before coffee break?
Thank you everybody for the great panel. Applausements.